Okay, so let's talk profit and loss accounts, also, as I know, the management accounts. So proper bookkeeping so that you can keep on track with your company's finances. So as I say, I'm not an accountant, and you do need to take accountancy advice for anything to do with tax and finances, etc., etc. But my advice is get yourself a good accountant, one that will actually work with you. And this video is really for people who haven't been doing proper bookkeeping on a regular basis and aren't keeping monthly management accounts and running a full profit and loss on the business. You know, as I said in the intro, sort of 5 years ago, we were running a bookkeeping system on paper in a book, and it was all written down. And then at the end of the year, we give all of that in a box of receipts to the accountant, and they produce our yearly accounts. But that's just not good enough when you're trying to grow a business and scale it. Because what happens is you only find out about your tax liabilities at the end of the year, and you only find out whether you actually made any real profit at the end of the year, because you're not being able to monitor so closely all of your expenses and your income streams. So it's really important to get this right, and there's loads of softwares out there now. We use Xero, which is one of the most popular, but there are other ones like QuickBooks, and I think Sage do one as well. But Xero is the one that we use, and you know, it's monitored by our accountant as well. So our accountant actually does our bookkeeping for us, and I'm able to just have an overview on a weekly basis of the finances, and then at the end of every month, we get a full set of management accounts produced, which we can have a look at and review for the previous month. So, yeah, I mean, some people, you might be watching this thinking, well, this is really simple. I know what a profit and loss is. Well, that's great. You're obviously already doing things right, and this video might not be for you. But I certainly speak to a lot of agents out there who, you know, have been really good estate agents, and they are really good estate agents, and they started their own business. And then they're like, wow, you know, crumbs, how do you manage these finances? What goes on? And as I say, we were in that position ourselves many years ago, and this is something I've spent a lot of time kind of getting to know and learn, and it's been the revolution for our business, to be perfectly honest with you, because as I said in a previous video, you know, my 4 pillars of business, one of them is finance, and if you don't get the finance piece right, you'll fall into a lot of trouble, and of course run out of money, go bust, whatever the worst case scenario might be. So the way a profit and loss works, you know, a lot of people talk about your bottom line and your top line and things like that. Well, that comes from a profit and loss. So at the very top of your profit and loss, you will have your income and your revenue. Same things, it's just that's what they're listed as. And you can have that broken down into as many income streams have you got, and you know, I'm a big advocate of multiple streams of income, and we'll cover that in another video. But in our business, we've got something like 12 different income streams, so they'll all be listed under the income and the revenue section right at the top of the profit and loss. And so we get to a point, you know, we've listed all of our income, so sales, lettings, guaranteed rent, referral fees, conveyancing referrals, mortgage referrals, etc., etc., etc. We list all of that down, and then we get to a total revenue, total income figure. And that will tell us everything, all the income into the business. And so that is what is your top line. That is the top line, your total revenue, total income. That is what we know as the top line of the business. And then we have underneath that what we call the cost of sales. Now, cost of sales, again, you may know this or you may not, but cost of sales is anything that's attributed. You have to spend that money in order to make those sales. So, for instance, if you're selling a rent guarantee insurance and you're making a profit on it, then that would go into your cost of sales, because you couldn't have made that sale without purchasing that rent guarantee. And so that's where margins come into it, and that's where people will talk about margins in business. The margin will be the difference between your cost of sales and your revenue, and you need to obviously allow for other operating expenses as well, which we'll come on to in a minute. But once you've got your total income, your total cost of sales, then you will produce what's called a gross profit figure, which often looks quite good because sometimes your cost of sales aren't actually that much. It depends on the type of business you're running. Certainly in the estate agency business, the cost of sales aren't huge. They're, again, depends on the volume of rent guarantees you're selling, etc., etc. But the point is that it will still look like a big figure. You think, wow, I've got a lot of money. Well, actually you haven't, because then after that we have our operating expenses. So that is anything else to do with the business that costs you money, but that isn't directly attributed to making sales. So your building rent, your accountancy costs, your mileage costs, etc., etc. There'll be a whole huge list of those. Anything that's a tax deductible expense will go on your operating expenses. And so once you've got those all listed down, you'll then have an income, a total income, total revenue figure. You'll then have your gross profit once you've taken away all of your cost of making those sales. And as I say, when I talk about sales, I'm talking about anything that drives revenue into the business. So forget that if you're an estate agency, you're running sales and letting. Sales on a profit and loss relates to any kind of revenue. And then that's why you then break it down into sections under the revenue section. So you'll have taken out your cost of sales, you'll get to your gross profit figure, and then you will list all of your operating expenses. And then you'll get to, right at the bottom, what we call the bottom line, which is your net profit. And your net profit, obviously, if you're taking, when you're taking dividends, you're paying 20% corporation tax on that as well. And again, get advice from your accountant on how you can reduce those tax liabilities, etc., to increase your actual take-home profits. But that is essentially a very basic way of explaining how a profit and loss works. Now, as a business owner, and the reason you need this is because you need to be able to monitor it, and you need to be able to monitor it regularly. It's no good getting to the end of a whole year and then finding out that, oh, actually we did make profit, but we haven't got cash in the bank, because cash flow and profit are two separate things, and we need to remember that. And that is something I'll cover off in another video, why that's the case. But you need to, the other thing is we need to cover off is the fact that some things don't go into your operating expenses, and you might be taking cash out, but it's actually going onto your balance sheet. And that's another thing that's quite complicated and you have to get your head around. And again, too much for this video, so we'll cover that in another one. But the point is that it's, you can get to a point where you're showing a lot of profit on paper, but not all of that cash is in the bank for various different reasons. And so that's why it's no good getting to the end of a whole year and having this problem. Sorry, the dog's barking in the background now, so I don't know if you can hear that or not. But yeah, it's no good getting to the end of a financial year and then finding out that you've got a huge tax liability which you didn't know about, or in fact you haven't actually made any money at all, and it's pointless going to work that year. So that's why it's really important to have this monitored on a monthly, weekly basis, but minimum monthly, so that you can really get to grips with what's going on in your business. So as the business owner, you've got two jobs really. We've got that top line and the bottom line, and so you've got two jobs. One of them is obviously to generate as much revenue and as much income as you can onto that top line, get as much money coming into the business through multiple streams of income, driving sales, getting your team working, getting as many customers as possible, and getting as much revenue into the business, because we can't make profit if we have no revenue. And then you've got another job though, which is really important, because you can make lots of revenue and not make much profit if you're not monitoring it. So it's really important that, as well as driving that revenue, making sure as much money is coming into this business as possible, you then need to have a second hat on, which is like your stingy hat basically, and your Scrooge hat, and try and reduce the cost of the business as much as you possibly can, and start squeezing those expenses downwards. So you should be, but this is what having a software in place and reviewing this on such a regular basis does for you, is that you'll be able to quickly identify that, wow, that's a big cost. Why have I spent that much money on software, for instance? And then if you've got it on a digital platform like Xero, you can click in and analyze exactly what you've spent on that particular category. You can categorize everything. Marketing and advertisement, computer software, IT support, legal and professional costs, everything that goes along with your business. You can categorize it down to as minute detail as you want, excuse me, so that you can really monitor what you're spending your money on. So that's the two main jobs as your finance director hat on is two things. One is your sales director, and that's getting as much revenue into the company as possible. And the second thing is your finance director hat on, monitoring those costs, looking where you can make savings, and just making sure you're running a profitable business. So that is essentially how, in a very simple format, a profit and loss works. Hopefully that's given you some reasoning as to why it's really important to have that within the business, and also just makes clear what your job is as a business owner, and that is to make a profit, because you get paid from profit if you're paying yourself out of dividends. And that's, again, another reason this is really important. You don't want to get to the end of the financial year and you've been drawing money all out of dividends, and then you actually haven't made the profit to allow for those dividends. So it's just really, really important. Finance is such a big thing in a business, and it can be, if you get that pillar right, the finance pillar, it will just reduce your stress levels. It will revolutionise your business. You'll know where you can spend money and where you can't. You'll just be able to start making tweaks to the business to create more profit and ultimately give you a pay rise as the business owner. So if you've got any questions on that, then please just get in touch. More than happy to give you some advice. But yeah, go out, get yourself set up with Xero or with another software, but speak to an accountant. I can put you in touch with our accountant. Very, very good, understands our estate and letting agency business model very well now, because we've really worked together to sort of hone how we put together the profit and loss and the management accounts. So if you need any help on that, just get in touch and I'll refer you on. But yeah, and if this is the first time you're watching one of these videos, please hit the like and the subscribe button. Subscribe to this channel, because we'll be bringing out loads of business content this year, aimed at estate and letting agents, but the principles we're talking about apply to any business, especially finance. Finance is the same whatever business you're running. Ultimately, we need cash. We need to keep cash in the business. We need revenue, and we need to keep our costs down so that we make a profit. So hope you've enjoyed that, and look forward to bringing you the next video.